Okay, so we'll now go to special topics. So those are the more complicated transactions in WSP 112. So the first one is equity entries. So to put things into the context, when you recognize a DTA and DTL, it does not always means that the other side goes to income tax expense or deferred tax expense. You need to look at or reflect on the original accounting entry giving rise to that temporary difference. And sometimes the entry could be resulting from equity transaction. So what are some of those examples? When you revalue an asset to the revaluation reserves, uh, you make a change in your accounting policy and the other side goes to retained earnings, retranslation of your financial statements, compound when you have compound financial instruments, or when you have a defined benefit superannuation fund as well, which sometimes could result in equity adjustments. So if you have things that goes into equity, then the other side of the DTA and DTL might be required to go against that equity account. So let's look at a simple example. Let's say you have an asset which you acquired for $10,000, and then you decide that I want to revalue this asset by 6,000, giving you a carrying amount 16,000. Now, what's the tax base of that asset? So the tax base when you acquire the asset is 10,000, and that will be the tax base. It will be a tax value for tax purposes. When you revalue that asset, it does nothing to change your tax base. So your tax base remains at $10,000. So your carrying amount 16,000 is 16,000. The tax base is 10,000. Therefore, you have a taxable temporary difference of 6,000 and deferred tax liability of 1,800. So you go credit deferred tax liability because it's a liability by 1,800. The question is, what do you debit? So, like I say, you need to reflect on your original accounting entry, giving rise to a temporary difference. So what was the original accounting entry? It was a debit to the carrying amount of the asset. The credit was not to the P&L. It went against the asset revaluation reserve. So it tells you that when I credit the deferred tax liability, I need to debit the asset revaluation reserve by 1,800. Okay. To further demonstrate this, as you depreciate the asset, your temporary difference is going to reduce over time. So that means that your deferred tax liability would reduce over time. So you'll debit the deferred tax liability. The question then is, what do you credit? Okay, state the answer in your mind and I'll give you the answer. You do not credit the asset revaluation reserve. And the reason why is because the depreciation is hitting the P&L. Josh, I'm not on mute, so maybe check your speakers if you cannot hear me or use a headphone. So yeah, so depreciation hits the P&L. So when you debit your DTL, it needs to go to the income tax expense. So I guess the rule is what's hitting the P&L and what's hitting the balance sheet.